Hi everyone, welcome. I have some positive news. With all the news that's going on in this world, which there's been a lot lately, a lot of exciting, a lot of controversial, a lot of, oh my goodness, we actually have some good news on the interest rate front. And so I've asked the lender that we work with, and you've often seen his advertising and what we send to you, Christian Peter with Sente Mortgage, to actually give you a little bit of good news about interest rates. So I won't steal your thunder. I'll roll it over to you and say, Christian, roll it away.
Roll it away. So I would say that much of our industry, I feel like we've been holding our breath. What seems like not months, but years now. And the main reason for that is interest rates have just added to this major issue, which is buying a house. And the root cause of interest rates being as high as they are has to do with inflation. Yes. And so you think you feel it at the grocery store. Your grocery store budget is $50 higher than it used to be, $100 higher than it used to be. But believe it or not, your monthly payment on a house right now is thousands of dollars higher than it was 2-ish years ago, right?
Yeah, and that's correct. And I've also seen a great example come across in an article that talked about in 2016, you could make $43,000 and afford a house, but in 2023 here in San Antonio, that $43,000 now takes $70,000 to $90-some thousand to afford the house.
Yeah, so this is a huge issue, and yes. And it has been for a really long time. So the really exciting news, I think part of the reason I'm here to talk today is that we had a really good inflation report last week. It was the first one in a long time. The Federal Reserve has a target inflation rate of 2%, meaning if we're at 2%, it's a good thing. It's a healthy economy. And we've been much above that for a really long time. And so that's why interest rates have been raised, is to try to help inflation. And so we actually had a positive reading below 2%. It was actually below 1% last month.
Oh my gosh! So yeah, I can't believe it.
So that means that if theoretically that last month repeats itself for 12 months in a row, which it won't perfectly, but then we'd be less than 2%, which is the target. And what that basically means is that the Fed could start to lower interest rates. And so their next meeting is in September. And so there will be other economic data that comes out between now and then. And so the hope and the belief is that the other economic data that we get hopefully continues to support the one we got last week, which is that inflation is starting to lower, that the jobs are not too inflated and that wages are not too inflated. And that will help the Federal Reserve feel like they have what they need to lower interest rates in September. So my hope and prayer, and again, this is the holding of the breath, is that this is behind us. And so hopefully soon we're going to start trickling down rates, which means house payments will go back down, which will really free up sellers who've been really interested in buying, as well as people looking to buy for the first time. This has been a brutal market for you guys, and so we're very hopeful that this is the beginning of the end.
Yeah, and I know that I've been reading everywhere, people are screaming for a correction for the housing market, for rates to go down, just so people can buy. So let's keep our fingers crossed. I think it was an important message to share with you, and I want to thank you, Christian Peter. You guys all know that if you need to get pre-qualified or refinance or a home equity loan, he does it all. And we'll leave his information below for you to get in contact with him. You can always find him on our website too. And we know and use him because we trust him. So thanks for joining us. And any other questions we can answer you, or if you're thinking about selling or thinking about buying, give us a call.